Hey, thanks for taking the time to go over the Cash2Keys platform here at AnnieMac. Appreciate you taking the time. Again, Nick Claghorn here. Just a little past noon, so for running behind a little bit, I apologize. Everything we're about to show you guys has everything to do with making sure that you are able to provide a new platform, a new option for your buyers. And it's a two-sided platform. One is going to be related to cash only, meaning they don't have a house to sell and they want their offer to stand out and show as cash. You check the cash box on the purchase contract. And the other half is going to be a buy now, sell later. And it's under the Cash2Keys platform. But the biggest thing is that the person who has a house to sell is going to then have up to 6 months to sell their current house, and they'll also rent while they're in that time. So you can have your client move in, get the house ready to stage, sell, whatever you need to do, and then allows for that transition not be so tight with, back to back, that kind of thing. So I'll go ahead and share my screen here in just a minute, and I'll show you some more info. And where this all came from, just so you know, is based on the fact that we knew going into 2023, so it's been over a year now, almost 2 years really, that we were going to probably be in a situation where the market was going to pick up. We didn't understand where rates were going to be, and that's not really the important thing at this time, honestly, because rates are going to be what they are. And if we can find a way to then show, and let me see if I can get the screen pulled up real quick for you guys. Make sure I've got that on here, so make sure I can see you guys. Apologize for 1 second here. Okay, let's make sure I'm sharing for the right screen here. Here we go. Okay, so with Cash2Keys, it was born out of the idea that competitive offer situations were going to arise. There was no doubt about that. And they already were crazy in 2021, 2022, especially during the pandemic. So it's even more important that we find a way to have a solution for our clients, because it's simple enough to say, we're going to go non-contingent. We're going to go ahead and find a way to make it so you can carry both mortgages. And therein lies the problem, though. Your client, whether you know it or not, if they're trying to carry the mortgage they have now and then add a bridge loan, which may have $1,000 payment, let's say, even though it's only for a few months, they got that. So you get the original mortgage payment, the bridge loan payment to add on top of that, and then the new mortgage payment. Not everyone can qualify for that. That's a very expensive proposition for a lot of people. And so what ends up happening is you get into these contingent offer situations. And recently, I've witnessed one example, which I'll share with you right now, where the client is looking to buy a house in southern part of Indiana. And what happened was they actually have a house to sell, and they went under contract. They're contingent. However, their house still hasn't sold on the market, so they're still waiting. In that time frame, and we're now in the end of October of 2024, so that means that the rate environment may not be the same by the time we watch this. But at that time, from September to October, rates have actually jumped almost a whole percentage point in that time frame. So that client either has to do a lock extension if they locked in initially with the lender, or if they didn't lock in at all, they're facing a worse rate environment, which obviously is more costly. Makes the whole situation very, very painful. And so now with this Cash2Keys, we could have looked at the equity position that the client had in their current home, set them up to then buy their house, the new house, with cash, remove their contingency, and therefore they would be set in on that locked rate. They'd probably be moved in by now. And we'd just be in an environment now where they have to, they'd probably be a month in to probably list their house. And now we've got 5 more months to sell it. And I feel like that's just a much lower pressure situation for a lot of people. All right, so that being said, I'm going to go ahead and run through this. Oh my gosh, slow down here. Okay. So with our agenda and what we're doing at cash offer, again, we're backing your client's offer with cash. If the client can't close due to financial reason, we will close with our cash. So again, the seller is going to know it's cash, but also know that it's guaranteed to close. If our client somehow, some reason loses their job or something changes, we are putting our money on the line. We're putting our name on the line to still buy the house on the date that it's assigned to close for the amount that's agreed to in the contract. Again, we remove the contingency, and this can be paired with an appraisal gap coverage. So if the client is looking to buy a house and they're $10,000 under, let's say, and they want to go, or their list price, and they want to go $10,000 above, we can we can make that work with appraisal gap coverage. Now, remember, if the client is getting pre-approved and they want to offer an appraisal gap, I'm going to make sure that they have that $10,000 in their bank account. Same thing applies here. When they do the appraisal gap coverage on this, if they offer a house at 300 and they go 310 on it, that $10,000 appraisal gap coverage needs to be wired to the title company within 48 hours, between 48 to 72 hours after the house was under contract. And that should be the way it should be anyway, because that guarantees to the seller that, hey, they've got the money, there's no issue there. And you're wondering, okay, it's a cash buyer. Why is there an appraisal? Well, we get appraisal waiver, 20% down. There's a good possibility of that. That's one way to forego that. But two is that way the client still knows they're getting what the house is worth. Again, the seller is guaranteed it's going to close for the price that you agreed to. So if the appraisal comes in low, we will still be able to allow you to go through the whole process like you would as a real estate agent, renegotiate, do what you have to do to make sure the price is what it should be. That way the client still gets a fair deal for their house. So while it's not complete 100% cash in that sense, there is at least a fair price offer there. And if you are going against just a regular cash offer and the waiving appraisal, the waiving inspection, chances are you're not going to win it anyway. So this is really the next step to that. And on top of that too, guys, your time is valuable. It's extremely valuable. I see this in my own day-to-day job here at AnnieMac, is you can't go around and be showing houses all the time. It's just not, plausible for your business. So therefore, we've closed over 1,100 transactions as of last month, company-wide, that clients are making, on average, less than 2 offers on houses before they get accepted. That's a phenomenal acceptance rate. That cuts down on your time. It lowers that emotional level, that frustration level that comes with being a buyer in this market, especially a first-time home buyer who's going up against a lot of clients who are older, who may be looking to downsize. This at least gives them an opportunity to then jump in and ease their burden. All right. So how does this process work? Well, we go for approval. Approval is the same as we do with a normal mortgage. We're going to get them pre-approved. We're going to send them through what's called a TBD process, or what is called a platinum pre-approval, where I'll actually collect all the documents up front, all their income, all their bank statements. We're going to even look at the last year's final pay stub for 2023 and 2022, or if we're going to be looking at next year, or looking at 2025, we're going to be at 2024 and 23. Last year's pay stub to make sure the bonuses and the overtime and everything's accurate for that. And then we're going to send them to an underwriter who's going to then go through that whole process of making sure that they are pre-approved officially with everything included. We will then get a coordinator on the phone from our Cash2Keys team who will do a welcome call with both you, myself, and the client to set expectations. And then there's an addendum that goes with the contract offers that says, your buyer such and such is working with AnnieMac Cash2Keys. We're making the offer on behalf of Cash2Keys, or I'm sorry, Cash2Keys is making the offer on behalf of the client. And that's 1-page or 2-page addendum with the offer. I'll also talk to the agent, let them know what we're doing as well to educate them, because I think that this, as much as this program exists in some people's minds in theory, they don't know the details of it. And so it's really comforting to have those details lined up for them. So then once we have that, then we make that offer. The client is most likely going to, if they secure the home, they get accepted, they're then going to buy the house with us with Cash2Keys. Now, we are still, like I said, going through the appraisal process. We're still going to do, let's say, a 30-day closing. Okay, we can go sooner than that. We can go up to 14 days in some situations. Let's say we get to 30. That's just like a normal process. So we've already pre-approved the client well ahead of time. And you're probably wondering, what's the fee? What's the cost for this? Well, if that client is not able to qualify with us by the time we close, then unfortunately they pay the fee. And AnnieMac buys the house cash, and they'll pay a fee, and they'll have to then buy the house back from us once they are able to get everything lined up on the approval. And then we will make sure to get that done. However, the goal is not to have that happen. The goal is to have them go under contract the same day that we originally had planned for it. So let's say today is October 29th, and the offer was made on September 29th. We have 30-day close. On October 26th or 25th, we will then, once their final approval is done and everything else, we will then pull our addendum out of the contract offer, put theirs in, and then they will then be the purchaser of that property. They will actually pay no fees. It's a 1% fee up front for Cash2Keys. In this process, they will pay no fee. And the interest rate is exactly whatever market rate was at the time we locked back in September. So if they're at 6.25% back then, they're still at 6.25% today. If they, like I said, we have it all set up. So we know that they've got a little bit of reserve set up for whether it's that appraisal gap or paying for that 1% fee, that money then just goes straight towards down payment on the house, and therefore they're all set up. They can do a 3% down, 5%, 10, whatever. They can still do the mortgage however they need to do it and still qualify, but that is not where we have to come in. So that's why it's important we see secure the home, and then it comes in. There's two paths: either borrower buys the home with a mortgage, no fees, or AnnieMac still buys the home, and then we make sure that's set up later. Wonderful process in the sense that like the client is still not losing out on it. They get to offer with cash and still get to be the ones buying the house. So again, the cash offer fee, 2% of the purchase price. We actually give 1% back to the client, refunded if we have to step in again. The other percent is really the earnest money. So that's the idea here. Minimum earnest money deposit. Typically, this isn't a problem. 1% for a primary residence. Again, here's a cash offer refund. 1% is retained and 1% is refunded if AnnieMac Cash2Keys steps in to purchase the property. It's refunded in full when the client purchases directly and uses AnnieMac Mortgage and the preferred title partner, which right now is Nation's Title here in Indianapolis. We are working with other title companies who are wanting to be partnered with us, but right now we've had about 20 to 25 of these deals closed, and we've had Nation's Title, and they've done a phenomenal job. They do a really, really great job working with us. We've known them for well over 10 years now and have been a really great title partner with us. The eligible mortgage types, this actually changed as of last week. We have conventional VA, but we also have added FHA into the process. So we can make that work with FHA as well, and we'll get more details for you if you're interested. Property restrictions, obviously it's got to be a primary residence that you're buying on. So it says 2 to 4 unit properties, but the idea here is that you've got to make sure that it's it's got to be a single family, or an SFR that they're buying, 10-acre maximum on the property, as well as if it's truly rural, there's a process we have to go through with that to make sure that it's all set up and good to go. Credit for this, 640 minimum, 680. That's if you're looking to put less money down. Overall, the credit process is pretty simple, straightforward, just like you would normally. We have to go through an underwriting process with an automated underwriting approval that will take. If it doesn't take, then we work through possibly a manual underwrite where we actually go in and evaluate their stuff manually, like it says. But then, of course, it gives them the opportunity to discuss how we're going to go about purchasing it. So, how real is the cash offer? Here's an agent right now from Keller Williams. It's explains, you need to educate yourself. And this is the hardest thing for me to get across to agents sometimes is if you educate yourself on this, you can go back through your pipeline 2+ years now, and you can see who are people that didn't qualify or who are on the fence that I need to educate to maybe help them with this. And if you get certified doing the Cash2Keys program with us as a realtor, like Ron did here, you can actually take this certification, apply it to all of your advertising, anything you need to send out to your clientele, your CRM, whatever, and they will then get that information as well, which then could drop some more interest. And you'll be one of the few realtors that are bought into this, and then you can have something that differentiates you in the market. Love to talk to you about that. Like I said, educate you on these types of programs. The better agent you are for the people you serve, the more information you have, the more at your fingertips, the better off you're going to be able to help your clients. Okay, so that's side 1A. Now we're looking at side 1B or 2B, whatever you want to call it, the next side of it. Buy now, sell later. This is all about having a home to sell with the contingency. And you got that client, I know you do, because I've had many myself. I know you have at least one that is saying, I would love to buy a house. I moved into my house in 2020. Maybe there's some issues with the home, but damn, like it's 80% equity has been earned since 2019, which on average comes out to somewhere around the United States, somewhere in that 280 to 360 range. $280,000 to $360,000 range of equity that these clients have earned. Again, this is on national average. In Indiana, we're probably talking 150 to 180, somewhere in that range. Wouldn't it be great to access that equity that I've earned in the house? But I just can't access it without doing a bridge loan. And if I do a bridge loan, I'm going to then have to worry about the payment on my current home, the payment on the bridge loan, and then I'm going to take those two things, be able to parse it into getting the next house. Well, here we go. We set this up. We're actually going to take the cash for the client, again, buy the house for them, and we will set it up where they have 6 months to sell. Once they close, 14 days to list at that time. So again, what are some of the challenges that we're looking at? That if you're contingency, you got to make sure that's the hardest thing to overcome in a competitive offer situation. So if you look on the left side here, it says the contract is contingent upon the successful sale of the buyer's property at so-and-so Broad Street. The contract is contingent on buyer obtaining finances within X amount of days. Well, here we go. We're not going to go through that. We're going to get pre-approved just like we talked about before with the cash offer program. You're going to then be set up where the client will actually get a link on their phone. They'll go through and they'll take pictures with their phone. So they'll go through and they'll label at least 10 rooms in their house, maybe less if there's a few, if it's not 10 rooms, obviously. And they will actually then, our team will go in and do what's called a BPO, a broker price opinion, based on what that house looks like, where where it's located. And some people may think, okay, how are we going to determine this? They're not sending an appraiser out there. Well, no. And we're not charging your client either. We're not charging you or the client to do this. So the idea is that we send out someone, or we get the pictures, it's all geotagged with your phone. And then you upload those. You can do it for your client too. The client doesn't have to do it themselves. We go through it. Let's say the value is 700,000, and you're saying, man, I'm an agent. I've done CMAs on this. It sells easily for 750. That's fine. Send us the comparables. We'll go through that. And if we evaluate it and it all makes sense, we have no problem upping that to the 750 range. Once the client gets that value, they're then going to look back and say, okay, if you don't sell this house in 6 months, what are you going to buy it? What are you going to sell it to us for? Because we're going to buy it off them in that situation. Typically, 80% is going to be that range. So between 80% of the value, plus we're going to charge rent, those two amounts, that's essentially the cost. That's the starting point. Then we look at how much equity has been earned in the property. The houses were 750, and that bottom 80% line comes in at, let's say, 620. Okay, that's $130,000 in equity that you've got right there to work with. That's the idea. That's we're going to take that and say, can they qualify a minimum 5% down on the next house with a conventional loan using that equity? Most likely, yes. I mean, unless you're buying a $4 million home, it's going to be a little more difficult, right? But they're not. We can go up to $2 million with this program, by the way. So therefore, you take that amount, we do the math on that, and we say, okay, here's what you're qualified for. The other part of it is you have to have some sort of reserves up front to pay the cash offer fee, like you saw on the slide before earlier, but also be able to successfully make a down payment on, or not down payment, excuse me, successfully have the fees for the earnest money deposit. So those combined there, I mean, it's very similar. So like on a $300,000 property, if it's 3%, we're talking about overall, 3.5%, you're talking what, somewhere between 12 to 14. Well, let me do the math real quick here on this. As I talk, I don't want to be completely out of my mind here. But 3% would be 9,000, and 3.5% would be roughly about 11.5, right? 135 times 300. See, we have to use calculators too. 10,500. So if we're somewhere in that range, plus 6 months of rent, which I can go through that in a little bit too when we get to that point. If they have roughly, let's say, 16, 17,000 that's accounted for in a bank account somewhere, it could be a retirement account, anything that can be liquidated within a short period of time, then we can make this work. All right, so that's all. That's kind of the murky details. But let's go back to how it really works. You get pre-approved, like I said, you find the home you're looking for. Once you make your bidding, offer gets accepted. So once, congratulations, we're rocking and rolling now. Closing time, again, we're setting that addendum on the side to show that we're going to be buying the house cash and that we guarantee that closing date. Once it closes, the idea here is that if you were to set this up and then we buy the house, again, you're paying that cash offer fee like we did before. It's more likely that this is going to be the case in this situation. Whereas Cash2Keys, the cash offer program, you're more likely not to have to worry about it because we could probably set you up on the mortgage in plenty of time and not have to worry about paying the fee. But here, you're trying to sell their home, and if you haven't lined up a closing date, so let's say it's a 2-week, 3-week difference, they'll buy the house using AnnieMac's Cash2Keys, and that's number 5, their closing time. And then number 6, they're actually going to move into the new home. And that rent is going to then accrue for about 2 to 3 weeks. They don't pay it out of pocket. They actually pay it out of the proceeds when they go to sell their old home. So number 7, sell your old home. Once you get everything out of the way, you're able to stage it, you're going to get top dollar for that home. And most likely, hopefully, have a multiple offer situation on your hands too. So you can sell the house and get it done on your terms in the least painful possible way, because we all know those back-to-backs or the moving companies, the weather, and everything else that goes into it. Not exactly the funnest way to go about it. The other side of it too is we want to create listings. When I go into open houses, I talk to clients all the time and I say, how many offers have you made on a house? And they say, I've made 7, 8. I just haven't bought yet. Well, what have you thought about? What's really holding you back? Well, I have a contingent offer. So you have an opportunity here where you can then show your client when you list their house, hey, I've got a platform here that we can turn around, and when buyers come in and they say, I can't buy this house, I got to go contingent, they have an opportunity to then go, hey, talk to my guy at AnnieMac. He's going to help you out with the cash to keys, buy now, sell later. And then we can set this up where your buyer, your client who's your seller, your client who's looking to sell their house is going to have a guaranteed offer on their plate that's going to close on the day that you need it to close. Pretty remarkable as far as the thought process. I think when we went through this, I think that when corporate came to us about 2 years ago on this program, it really made sense. It was like, what are the details? What's like holding us back here? Is the rate higher? What is it? No, it's none of that. It's been pretty straightforward, and it's been a really nice, successful, clear path for a lot of people. Buy now, sell later also win bids for clients that would otherwise drastically overpay. And like I mentioned before, you go $10,000 over on the list price because you're doing an appraisal gap coverage. Well, who's to say that you have to do that when you could guarantee the closing date and pay the amount that the house is worth and save them that $10,000 and maybe use that towards a cash offer fee if needed? I mean, plain and simple, they're not overpaying for the house in that situation. And again, win listing appointments because the seller is going to be at ease knowing that you've got opportunities. You're going to maximize sale price. And then again, marketing to your sphere. What would you do? Like, can you talk to your client right now and say, what would you do if your dream house came on the market right now? And if your clients look around going, I don't know, because they just aren't ready, that's really the biggest thing holding back. Two things are holding people back right now in our market. And again, this end of 2024, we're getting to election time. Regardless of what the election comes out, what the result is, the real two reasons that people are holding back is one, they don't have enough money saved up because they might think they have to put 20% down. Or perhaps they feel like that the money that they have saved up isn't enough to make it work because they're going to be cash poor because they're going to be stuck sitting there with their house not on the market, not being ready to sell. The other thing is timing. Like, am I ready yet? A lot of people don't even know that they're ready. If you just get them ready and talk them through the process, they would find out that they're ready. And I think that once you go through this process, because there is no cost up front for the BPO on the house, there is no cost up front to get pre-approved. What are they doing to be ready in that situation? If I went to go buy a house and I see it's on the perfect corner of that house that I drive by every single day when I take my kids to school or on my way to work, and I would love to buy that house because it's going to save me 10 minutes of my commute every single day, or my kids are going to be able to play down the street. All those kinds of things that really makes you want the house. And then one day that sign goes in the yard, and then they start going, hey, I want to hurry up and buy this house. It makes you panicky, gets them all anxious. It makes it really hard on the loan officer. My God, when I go through this process of people, I feel so bad for them when we're rushing through things because I have to ask for certain things to make my job to be as accurate as possible, to make sure I give your client the most quality service, and that we're not at a point where we pre-approve somebody and then 3 weeks, a week before closing, oh, sorry, find out, hey, turns out your income is not right because I wasn't able to get all the information up front because you guys are rushing to get in that house. This gives you the opportunity to set up your pipeline, be able to manage your pipeline, manage your clients, manage their expectations, and then you can still work with other clients. We have them ready to go. So when it comes time they need that, all we have to do is then settle in, do a quick little powwow, make sure we understand what the price is going to be, send it off to make sure we get that pre-approval letter with the addendum lined up and printed, and boom, we're good to go. You can call the client that time and say, hey, I've got a cash offer coming for you. It's coming in 24 hours. And that you think that if you're a buyer or you're a seller's agent, I would not sit there and wait. I mean, I would sit there and wait. I would rather have a cash offer. No one guarantees it's going to close rather than sit there on these other contingent offers or whatever else is out there. So just to keep that in mind. And when I say contingent, it's not always about selling contingent on the selling of a home. It could be contingent on getting a mortgage, right? Because clients, you as a real estate agent, you have accepted an offer and you have to wait 30 days. And then let's say that mortgage company doesn't get all the documentation in line on time, or the appraisal comes in short, or whatever it might be. And you've got to move the closing date out because they haven't got everything lined up. It's a pain in the ass. I get it. And so you want to make sure that if you can get an offer that's going to eliminate all those kinds of issues, why wouldn't you at least wait 24 hours to get that opportunity? Similar to the cash offer, we're going to get an approval. We're going to get the welcome call. Again, we're pre-approved well ahead of time with the platinum pre-approval. You're going to have at least 14 days. And, we want to close in 14 days at the earliest, but more time we get, the better, just to make sure we line everything up on time. And then once you close, we're going to have 14 days. Your client's going to have to actually list their home for sale. So that's another thing too, is 2 weeks, is that enough time? I don't know. You need to work that out with the client. And that could come in a strategy call well ahead of time to make sure that they understand the expectations of that. Now, accruing rent. So when you go and secure the home, once you buy the house, you can move in. You're all excited because you're there. Again, you're not paying rent out of pocket. But there's an equation that goes into this. And whenever you do this, it typically comes out to whatever that 5% down mortgage payment would be for the client typically on that house. So if they're buying a house for, let's say 300,000, we do a math problem of 0095 times that or multiplied 0095 times the cost of the house. I'm on a calculator. At 300,000, that's a $2,850 monthly payment they're going to make on rent. And again, this is a rent cost, but it comes out of the proceeds from the sale of their home. So if we're looking at, if it's 2 weeks, we're talking half that. It's 1,425. It's a math problem we can definitely work out, but that's the idea in the beginning is expectations and showing what that looks like. And other options are out there that say like, okay, they'll just charge 2.5%. Well, if you think about it, we're going to be basically charging about the same, if not a bit less, based on how long they have to rent. Again, we close on the home. Love the idea that they're in the home, everything's settled. That's exciting. Now the real part is then you get to focus on the selling of the home. You get to market it the way you want to market it, and they can have showings. We're gonna have to worry about getting the chinchilla out of the house or making sure that the dog's not in there or that so and so kid is not there. The house is empty and ready to show. So again, a cash offer fee. Very beginning, I can talk about earnest money, 2.5% of the purchase price. We go through a cash offer refund. Again, 1% in this situation will be retained when we do this program. So we will refund 1.5% of that back to them they can use for the down payment. The idea here is that it's capped cost of doing business. If they were to close with us, something happens where they fall out of favor and we have to end up pulling on the home and then turn around and sell it later on. Well, what does that tell you, right? We're going to have to then make sure that we cover our costs because we're going to have to try and list it ourselves. Down below where it says client accrues rent pays on the CD, that 0.0075 is actually 0.0095. This slide's probably a couple months old, but the 0.0095 reflects the current market rate. So again, refunding in full and the client purchase directly, if that happens, if you set it up and your client gets an offer the next day on their house, you want to set it back to back, no worries, no cost at all for this. So again, that's the AVM I talked about with doing the VeriSite app where they take the geotag photos. We get an active listing showing the house is listed. BPO, of course, recent appraisal. Like there's all kinds of things we can use to make sure that we get the valuation of the property correct. So don't think that we're going to sit there and do what some of these other companies have done because we're not stupid in the sense that we've seen it. We don't want to be associated with these other companies. I think you know who I'm talking about. There's companies that used to be out there that have tried this. Their main objective is to collect fee or buy the house at the cheapest amount they can so they can turn around and make a huge profit on it. That's not the idea here. Our main goal is to acquire the client relationship, get the mortgage, be in business with you, help you get your house sold, help you get your commissions, save time for you. And then also for us is acquiring market share. What better way to go about doing that than the way we're talking about? If we just were out there setting fees like some brokers do, yeah, it's great. Okay, they just essentially paid for their bridge loan without paying cash, without charging them a whole lot for it. But they charge them still 2.5%, 3% for it. If that house closes, great. If it doesn't close, what are they going to do about it? Okay, they're still not solving the problem. And that's really where it is. We need to get clients off the fence and find a way to get them in a home. So Remax, Steve Kempton, he's a partner of ours as well. This is one quote. He said, "What are you waiting for? It's helped our business stay where it needs to be through these difficult few years. And those years could continue on. So why not go ahead and get in and start talking about something new?" I'm excited to work with you and excited to work with your team in your office. It would be my greatest pleasure to come in and present this to you guys and give you the full breadth of what we're talking about. Make sure that you get to ask all the questions you want to ask because there are a lot of them. I get it. We're trying to answer those questions ahead of time without trying to confuse anybody. It's a very, very rigid process, it's a very, very, not rigid. It's the opposite of what I want to say. It's a very flexible program. When people think it's very rigid, it's really flexible in the sense that we can move things around so that the client is not having to worry about having to pay those fees if they can help it. And again, you're making a cash offer. You get to check that box on the offer sheet. So last thing, there's certification, like I mentioned, you can take it. You can scan the QR code and sign up through that. Make sure you put my name in the on the box that we can stay connected. And then you basically go through 10 questions based on what we just went over. And once you're certified, you can then again put this in your email. You can put this, anywhere you want to when it comes to marketing yourself and allow for you to become a Cash2Keys certified realtor. Here's a little study guide you can look at. Again, don't get beat out by a cash offer. Don't get beat out. That's plain and simple. Number two on there as well, as you read through these, like FHA is now part of this. We have a cash bridge program where we can actually do the cash offer. If a client is looking to downsize, I get clients that come in from, let's say, New York that want to move closer to their grandkids. They have a house on Long Island that's $560,000, and it's all cash or it's all equity because they have no mortgage. They can sell that, use the cash bridge program, and move right here in Hamilton County or Boone County or Marion County, wherever we're at, and then use that cash bridge program to then be able to facilitate the program without having to go through the whole cash or without going through the whole bridge loan process, which only allows up to 80%. A lot of times it doesn't let you get the full amount. So yeah, take a look at those. If you have any questions on these, I would love to answer more for you. And that's really all I have for you guys. I really appreciate you taking the time. Really have found that this program is a great stepping stone to learn more about your program and your processes and your team. So if it's not so much this, I'd like for it to be something where we can get together and talk more about how a local mortgage company, direct lender, somebody who has an MBA like myself, who's been in the business, who understands all the different processes, how to go about getting down payment money and all those sorts of things to make sure that your client has the best options available to them and they don't get stuck on the sideline. Well, guys, I appreciate you taking the time. Thanks so much for coming in today. If there's anything you need from me, please let me know, and I will be looking forward to seeing you guys in the near future. All right, guys, take care and have a great rest of the year and holiday season. Thanks.